Good morning, everyone.
Morning,
Welcome
Kat.
to the Baby Boomer Show. Hey,
Yep.
we've got a great guest today, Ron. You want to tell us who we've got with us? Hi, Maury.
Hey there.
Maury McCoy is president of McCoy Associates, and this is our 22nd show. And those of you who have been watching the show know that we've been concerned about everybody, but mostly baby boomers, about what the government's been doing since 2008. Basically, they've been printing money. So in 2008, we were in a recession and the market crashed. And this idea called modern monetary theory said you can solve that problem. Just print money and it'll grease the gears and everything will be fine. And it seems that worked. The votes are still out, but it's an experiment that the Japanese started a few years earlier. And it's a big experiment and it's risky. But now, with the COVID, we've got $3 trillion. First of all, quantitative easing was $4 trillion. The COVID relief last year was $3 trillion. We're probably going to get another $3 trillion this year. So you add that all up, and that's $10 trillion. Our total economy is $20 trillion, which is about the amount of our debt right now. So I'm concerned, and I think you should be too, about the possibility of inflation happening. When too much money is chasing too few goods, we get inflation. And what that means for you baby boomers who are sort of living on fixed incomes, many of you are limited to what money you have. If it costs you $100 to buy a loaf of bread a year from now, it's not going to be pretty. So we've been planting that seed, and many of you have said, so what do we do? And I've said, well, you can buy TIPS, Treasury Inflation Protected Securities, you can buy gold. And we've talked somewhat about how those work, but we haven't spent much time at all on this idea that is pretty complex. It's called Bitcoin or cryptocurrencies, and Maury is an expert in that space. And what we've asked Maury to do is explain to us as best he can how cryptos work. But before he gets into the details, I'll just say to you that the money in your wallet is called fiat money. And it only works as long as we all agree that, when you go to the store with a $10 bill, they're going to give you something for it. If that stops working, which would happen with hyperinflation, you need something else. And one of the things about Bitcoin, even if we walk away from the show not understanding it all, some really sophisticated people do trust it and have faith in it. So just like the paper money, having faith in that, we may come away from this with trust in the crypto. So with that, I'm going to turn it over to Maury and ask him to introduce himself, and then we'll get into the meat of the episode.
Yeah,
Thanks.
yeah. So Maury McCoy, why should you trust some random guy on the internet who's talking to you? First off, don't ever trust random people on the internet. First rule of crypto. There's a lot of them out there.
Sure.
But no, what I do is I'm what's known as a third-party marketer. So I help endowments and pensions and foundations, family offices, people with a lot of money find unique investment managers. And over the past few years, I've actually represented some crypto asset hedge funds as well as venture capital funds focused on this space. One of my clients, the founder, had a computer up and running on the Bitcoin network on day one. As you can imagine, that was a pretty good time to be an investor in Bitcoin. So that's something that I do. I've been a Bitcoin investor myself since 2014. So investor is probably a strong word. I'm one of these technophiles who likes to dabble with things. So I was messing around with it since 2014. But the other thing too I want to add is that hopefully folks can learn something about Bitcoin and cryptocurrencies. But this is for educational purposes only, not investment advice. Everyone has their own unique situation. I'm a registered broker, so that's kind of the required disclosures there. But if you want to learn more, I can be found on Twitter at Maury McCoy, or I can be emailed Maury at McCoy Associates. Happy to answer anyone's questions in the audience. But so that's kind of where I'm coming from. Yeah, we can go on to the next slide, probably.
Yeah,
Okay,
great.
let's go to the next slide.
You're the man. Tell us about
All right, yeah. Well,
What is Bitcoin, Maury?
Yeah. So first off, Bitcoin is a new digital form of money. That's the simplest explanation. And then my definition goes into a little more detail, but it hits a few of the high points. Everyone kind of describes it a little differently. But what Bitcoin is it's a scarce digital asset that isn't issued by any government or corporation. Okay, no one's in control of Bitcoin. Anyone who can access this Bitcoin network can send or receive Bitcoin without needing permission from anyone 24/7. There's no banking hours in the Bitcoin world. And the key thing here is that it's a scarce digital asset. There will only ever be 21 million Bitcoins, and that's very important. Currently, there's about 18.6 million Bitcoins in circulation, and new Bitcoins are coming online every few minutes. But to put that in context, there's over 50 million millionaires on this planet. If each of them wanted one Bitcoin, they couldn't own one. They couldn't even own a half of a Bitcoin if everyone wanted one. So scarcity is something that is a big factor, and not something we're having at the moment with dollars, which are kind of being printed out of thin air. So the key here is when I say a scarce digital asset, everyone is familiar with digital assets. You've got pictures on your phone, you've got music files, but the problem is if anyone else copies the zeros and the ones that make up that picture, then they've got a copy of that picture too, and that obviously doesn't work with money. But about 10 years ago, a very clever person named Satoshi Nakamoto wrote this interesting and really unique 9-page white paper describing a way that people could actually prove that they owned a digital asset. And this has been a problem, computer geeks and math nerds have been trying to solve for a long time. And here this guy does it in 9 pages. It's a really elegant solution. And so with that, we were able to create this digital asset and prove that someone owned it. And that allows us to transfer value over the internet, which is a really innovative concept and one that we hadn't really had before. So yeah, let's go ahead and maybe move on to the next slide.
Okay.
And we can talk. Yeah, so a lot of people, get confused about what Bitcoin is. And the easiest way to describe it is Bitcoin is just a public ledger, and that's it. You can kind of think of it as a giant spreadsheet in the cloud or a spreadsheet that everyone can access. And it says who owns how much Bitcoin. So it might say Ron owns 5 Bitcoins and Kathy owns 10 Bitcoins. And that's really all Bitcoin is. If you think about it, public ledgers have been around with us for a long time. The very first writings of humans 4,000 years ago were public ledgers, keeping track of who owed how much in wages. So it's just kind of the evolution of that concept now for the 21st century. So a lot of people, to further explain it, there are no physical Bitcoins. If someone tries to sell you one of these, this is a novelty item. It's worth about $2. So don't spend $40,000 on one of these. The Bitcoins also, they're not on your computer or on your phone. People might say, oh, I've got a Bitcoin wallet on my phone, but those Bitcoins aren't on your phone. They're on this public ledger. If you drop your phone in a boating accident, you haven't lost all your Bitcoins. And when I say public ledger, I do mean public. There are 100,000 plus are what are called Bitcoin nodes, which are people that are running the same software. It's open source, so everyone knows and can see the code and knows that it's trustworthy. And they keep identical copies of this ledger. And what happens is every 10 minutes, that ledger is updated with new transactions. So if Kathy wanted to give Ron some Bitcoin, that transaction would show up on the ledger, and then 10 minutes later, it would be permanently stored there and could never be changed. So that's the thing about the ledger too, is every balance, every transaction you can see on this public ledger since day one. It's updated every 10 minutes with new ones. And once they're on there forever. It's immutable and they can't be changed. Yeah.
Now, Maury, the people who are looking at this aren't the typical guy. I mean, these are sophisticated folks who are running not running it, but running the software anyway.
Yeah, it used to be you could.
If I went out there, would I know what I was looking at? Or could I even go out there?
Yeah, it's interesting. You can go and look at blocks, and there's these things called block explorers where you can actually watch the transactions happen real time.
Wow.
If you send a transaction, it kind of has a little transaction ID with it, almost kind of like your FedEx tracking package. So you can watch it go and move through the Bitcoin network and
Cool.
see that it's confirmed and made it to the other side.
Nice.
Yeah, it's kind of fun to do sometimes, and sometimes people hide messages in the Bitcoin transactions, and it's a whole nerdy world out there of
Okay.
Bitcoin.
What-
It sounds like being on eBay.
yeah, it's that's a unique group of folks as well, and they both benefit from network effects. The more people who use eBay, the more people who want to sell on there, the more people who want to buy, and the exact same thing happens with networks like Bitcoin. The more people who use Bitcoin, the more people who want Bitcoin, and they both benefit from this network effect that causes the value of both of them to increase.
Great.
Yeah.
You know what language the software is written in?
Yeah, it's written in C++ was the original code, the core code. However, I will say that Bitcoin is what's known as a protocol. So in much the same way, you guys use protocols all the time, maybe even without even realizing it. If you look up in your web browser right now, there's probably an HTTP, that's the Hypertext Transfer Protocol.
Right.
We use SMTP for email. So really, a variety of programs, whether you're on a Chrome browser or Firefox or whatever, can access that protocol. So people can write Bitcoin wallets, for example, in whatever code they want, so long as it can talk and interact with that protocol. There's certain rules, and as long as you're following the rules, you can play in the network.
Wow. Okay.
Yeah. I said play in the network. It's worth about 700 billion now, but yeah.
Yeah.
So yeah, let's go on to the next slide, and we'll talk a little bit about how transactions actually happen. Probably the easiest analogy for your audience is sending and receiving Bitcoin is very similar to sending and receiving email. You have what's called a public key, which is a wallet address that's used to receive funds. So I'm not sure if folks can see that one there, but it's a long string of characters, and that's actually one of my Bitcoin addresses, so anyone can feel free to send Bitcoin there. And a Bitcoin address is very much like your email address. It's publicly visible. Anyone can also look and see how much Bitcoin is associated with that Bitcoin address, but they don't really know who it is. It's for that reason, Bitcoin is pseudo-anonymous. So no one would be able to necessarily figure out that that address is associated with Maury McCoy. So it's very much like your email address. Anyone can send things to it. In the other aspect of this is your private key, which is a secret number that is used to prove that you own that public address on the left. And there's a variety of ways to create a private key, but you can kind of think of it as your email password. If someone wants to send you email, if all the spammers can send you email in the world, but if they want to send email from your account, they have to have your email password. And so what's interesting about it is there isn't a big company out there like Facebook or Google assigning you a password and an address. They're mathematically generated via cryptography. So there's a couple different ways to make a hardware wallet. You can flip a coin 256 times and take those zeros and ones and turn that into a private key. The more popular way is there's a predefined dictionary of 2,048 words. And oftentimes Bitcoin is random, oftentimes an address is randomly generated from those. So you'll pick either 12 or 24 words, which will come to be your private key. And as long as you can remember those 12 or 24 words, you will always have access to send the Bitcoin that is associated with your public address. So it's kind of like your email password.
Maury, I got a question on that. Move this here. Didn't you say, though, that if somebody loses their password, then they're kind of really sunk?
They are out of luck. Yeah, whereas you can email Facebook or Amazon and say, hey, can you reset my password? There's no one there to reset your password. It's if you do take hold of your own Bitcoin and have it on a Bitcoin wallet, or for example, here's an example of a little device. This is called a hardware wallet, and this is a hardware device that randomly generates 24 words for you, and you can use this little device to send and receive transactions if you plug it into your PC. And that way, your 24 words never have to touch your computer. You don't have to worry about hackers. They can't get to that little device. And so there's a variety of ways to keep your password safe. If, for example, I were to lose this in a boating accident, but I still had the 24 words, I can recreate my wallet. But yeah, you don't want to lose those 24 words. It's that's the key thing.
And go ahead.
You're going to tell us about Oh, we can let somebody else worry about the 24
Yeah,
minutes.
and in fact, for most folks, I would say the best bet is in the same way that you don't hold your own stocks. There are places called cryptocurrency exchanges where you can go and buy Bitcoin, and they will custody that Bitcoin for you. And they are much better at security than most people. Most boomers have trouble finding their car keys, let alone, you don't want to lose your private keys to.
Yeah, there you go.
Yeah.
Count me in on and passwords. Oh my
Yeah.
goodness.
Yeah.
And the other thing you don't want to do, at least this is what you were saying before, Maury, is don't put it in your wallet.
Yeah.
Don't keep it with you on you all the time, because somebody can steal it. And I said as a joke, I think what I'm going to do is write down 24 words, even though I don't have any Bitcoin, just in case somebody feels they can get my Bitcoin account.
Sure.
There's a tragic story of a guy who hid his 24 words in the handle of his fishing pole, and it was in a storage unit. And for some reason, he went out of the country, forgot about it. They sold off his storage unit. And, Lord only knows where this fishing pole out there is with 100 Bitcoins in the handle. So
Wow.
Something to be on the hunt out when, you're out garage sailing. Yeah.
So does that mean that if you lose your 24 words, then you have no way of recouping and getting your Bitcoin back?
Yeah. And
Really?
that's obviously, and that's obviously a problem, which is why I generally recommend other people, you allow other people to custody yours. There's other solutions, something called multi-signature, where you can have 3 private keys, and you need 2 of them in order to do a transaction. So a lot of companies use things like that, so that they'll have 3 private keys amongst 3 senior executives. If something were to happen to one of them, the other 2 can still sign the transaction and send it. And you can do 3 of 5, 2 of 3. You can set it up in any type of configuration you'd like. But there's a lot of different ways to try and keep those words secure. People stamp their numbers into metal plates in case their house, burns in a fire. But I think the simplest thing to do for most investors, especially folks who aren't getting in a big way, is there are these cryptocurrency exchanges, at least the legit ones in the US that are regulated. And I'll have a list later on of some of the folks I recommend. But those people I would trust more than I would trust a lot of individuals.
Yeah, I think we're going to go into that later on in the presentation here.
For sure.
So,
Yeah.
okay, let's go back to this.
Yeah, so basically to send Bitcoin, you identify who you're sending from, and 2, you sign it with your private key, and then you broadcast it to the Bitcoin network. And the next slide talks about what happens once you've broadcast this transaction. Kathy wants to send Ron some Bitcoin. What happens then? And this slide, I'm kind of packing a lot into it, but I didn't want to dumb things down too much for your audience because, Warren Buffett, always says, one of the biggest things that can get you in trouble is not understanding what you're invested in. And so, I at least wanted to make sure you had a basic understanding of what's happening. And this slide also talks about where the term blockchain comes from and cryptocurrency. So there's a lot here, but there's a special type of Bitcoin node, one of these computers running open source software on the internet. And it has a feature in that it is the only type of Bitcoin node that can add transactions to the ledger. Okay. And how this works is there are a bunch of these Bitcoin miners. They have specialized computers to do this, what's called Bitcoin mining. And they are all competing to add transactions to the ledger, because if they add new transactions to the ledger, they are rewarded with some Bitcoin. Okay. It's a little bit of a hard concept to understand, but let's kind of talk about what happens. So a Bitcoin miner will say, gather up about 1,500 transactions at any time, and they'll put them into a block. This is a block of transactions. This block also includes a fingerprint of the previous blocks. So, and the previous block includes a fingerprint of the previous block. So all of these blocks are linked together in a chain, and that's where the term blockchain comes from. You have a block of transactions that's cryptographically linked to another block of transactions. And it makes a long chain that can't be broken, because if anyone tries to go back and modify anything on a previous transaction a few blocks back, it'll screw up everything after the fact, and everyone will know that it's not a legitimate transaction. So in one of these blocks are a fingerprint of the previous block, about 1,500 transactions, and a random number called a nonce. And the reason there's a random number will become clear in just a second. What happens with this block is it is run through a cryptographic algorithm called SHA-256. And what SHA-256 is it's a hashing algorithm. It was actually developed by the National Security Agency back in 2002. And anything that runs through this, you can see it represented as a filter there on this page, but a meat grinder would probably be a more apt description. Anything that gets thrown into the meat grinder gets kicked out as 256 zeros and ones. If you put the complete works of Shakespeare in there, you'll get 256 zeros and ones. If you put Ron Surz in there, you get 256 zeros and ones. If you change even a period on the complete works of Shakespeare and run it through again, you'll get an entirely different set of zeros and ones. But what's so useful about this algorithm is that, let's say, for example, you wanted to download a file and you wanted to make sure that you had the same program that the person who was giving it to you intended you to have. Rather than check every 0 and 1 in the program, what you can do is you can run it through this algorithm, look at the 256 characters generated, see if it matches what the programmer said it should, and then you have an exact copy of what they intended. So this algorithm is used all over for secure bank transactions. Every time you transfer something on the internet that's encrypted, all of these, it's a very useful algorithm. And what Satoshi Nakamoto did, which is a really clever insight, is he found a way to make this into a game, okay? And so the game is, we're gonna try and run these blocks of transactions through this, through this meat grinder. And if it kicks out an answer with a certain number of leading zeros, that means that you've solved the mathematical puzzle, you've solved the block. And currently it's around 18 zeros. So as you can imagine, people put all these transactions, the fingerprint of the last block, a random number, they get an answer that maybe has 3 zeros in the front. Oh, that one's no good. So you guess again. And that's what's going on when we talk about Bitcoin mining. It is a giant, carnival guessing game. And the amount of computing behind it is ridiculous. The electricity expended on this random guessing game, about a year ago, someone estimated it as the equivalent of the energy Switzerland uses, or about 7 nuclear power plants. And it's only grown since then. But what Bitcoin mining does is it turns electricity into Bitcoin. And when Bitcoins are worth, 40,000 a piece, that's a pretty nice reward. And every time that a miner solves a block, what happens is they say, aha, I've got it. My block starts with 18 zeros. They broadcast it to the network. And everyone else, because they have the SHA-256 algorithm, can run that block through it and see, yep, it starts with 18 zeros. That guy solved it. He's going to earn the 6.25 Bitcoin reward. We're going to move on to the next block so that hopefully we can win that reward. And so that's what happens. It's the difficulty level adjusts. Sometimes it goes down to 17. Sometimes it goes up to 19, depending on how many people are trying to mine Bitcoin. But the algorithm adjusts so that a new Bitcoin so that new transactions are added to the ledger about every 10 minutes. Yeah.
So if the random number is called a nonce and you get it right, would you call it nonsense?
No, we don't use cents in the Bitcoin world. We use Satoshis.
Satoshis.
Okay. That's the smallest unit.
Well, that kills that idea.
Okay. Yeah. Okay. What else is interesting about that too is that right now the reward is 6.25 Bitcoins. When it first started, it was 50 Bitcoins every 10 minutes, which is why I said it's a really good time when there are only 5 computers on the network to be mining Bitcoin. And then every 4 years, the reward halves. So it went from 50 to 25 to 12.5 to last May, it dropped down to 6.25. And this is kind of like the inflation rate. What's interesting about this 4th period of 6.25 Bitcoin reward is that 6.25 is also the percent of all Bitcoin that will be created over this 4 years. So we're going to create 6.25% of the Bitcoin over this this 4-year period. Over the next 4-year period after that, we'll create 3.125% of all Bitcoin in existence, and this keeps halving until 2130. At which point it stops. So we know the monetary policy of Bitcoin for the next 100 plus years, and compare that to the Fed, where I'm not even sure what they'll do next week.
Yeah.
Yeah.
Right.
You're right.
Yeah.
Okay,
So,
Maury.
yeah. So let's talk a second about money so that we understand, people are like, okay, what's this magical internet money? How does it have value? You really need to understand the functions of money to understand Bitcoin a little bit. Money works as 3 things. It works as a medium of exchange. So you can think of like your dollars and your quarters and things that you exchange for things. It works as a store of value. So you can think of gold as an excellent store of value, diamonds, real estate, things like that. And it also works as a unit of account. Your Visa statement, they keep track of how much you owe. Your mortgage, it's being used as a unit of account to determine balances on a spreadsheet. So those are the 3 functions of money. And when Bitcoin was first created, Satoshi described it as he wanted a form of electronic cash payment. So he was primarily seeing this as a medium of exchange. But over time, for one, it's not the world's greatest medium of exchange. It can only do about 5 transactions per second. The Visa and MasterCard network do thousands. And it's kind of cumbersome for payments because you wait 10 minutes to see that the transaction goes through. It's not ideal. Yes, you can use it as a medium of exchange. People have bought coffees with it. The very first Bitcoin purchase ever was someone who bought 2 pizzas for 10,000 Bitcoins back in 2010. Yeah, those are worth $350 million now. So I like pizza as much as the next guy, but I hope they threw in some breadsticks. Anymore, people see the narrative as Bitcoin is the store of value, more like a digital gold. And the reason why is the scarcity factor. We know there's only going to be 21 million Bitcoin ever created. There's no way to create any more. The only ones who can do it are the miners. And we know, about 6 Bitcoins come online every 10 minutes. And because it's so predictable, and because there's no government or company behind it that can print more and inflate away your current Bitcoin, people are kind of excited about this concept of, hey, I can own something that's going to have value that no one else can take away. And the other thing too is no one can censor your transactions. If you want to send Bitcoin, you can send it to Venezuela, to Hong Kong, to Syria, to El Salvador, and back home. And no one can stop that 24/7. There's no banking hours. There's no ACH fees. There's no, converting from one currency to another. So it's a pretty powerful solution in that sense. And if you think about all the different currencies out there, there's currently about 180 different currencies. Bitcoin's just one more. People talk about, oh, is it going to replace the dollar? Is the dollar going to? No, but I don't think the dollar is going to crash anytime soon. It's the world's reserve currency. But could it become less valuable? I think so. I think we're seeing that. And that's really what Bitcoin, a lot of people see as protection against that. As the U.S. government gets a little crazier and prints more. As Ron, as you pointed out in an article recently, Venezuela in 2016 had the world's best performing stock market. Yeah. But it wasn't necessarily that their stocks were doing so well. It's that the Bolivar was doing so bad. There's currently 24 countries with an inflation rate higher than 10%. And it's kind of hard to judge what our inflation rate is in the U.S. You can buy a TV for $300, but the price of soybeans and wheat and corn are all going up. Yeah. So, it's people, if you're looking for a hedge, Bitcoin offers another solution almost like gold, except the thing about it is in a lot of ways, it's vastly superior to gold, which I actually think is my next slide.
Okay.
Yeah. Okay. So what gives Bitcoin value? So money and things used as money have certain qualities. And there's a list of qualities that money needs to have. For example, durability. It needs to last. Coins last better than paper. Wheat is a lousy form of money. Fungibility means you don't care, if you have this Bitcoin or that Bitcoin. You don't care if you have this one paper dollar or that one paper dollar. Uniformity is important. Back when they used beaver pelts, they were all different shapes and sizes. it made a pretty lousy form of currency. Diamonds are a great store of value, but they're lousy currency because they're non-uniform. They have different, the 4 C's is different for each one. And gold is great at all those: durable, fungible, uniform. But there's some areas where Bitcoin is vastly superior to gold. For example, portability. We talked earlier that you can send Bitcoin anywhere in the world 24/7, no banker's hours, just like email. No one can stop you and no one can seize it from you. Whereas gold is 25 pounds per bar and a little bit hard to transport if you want to get it to Hong Kong in the next 3 hours. Divisibility is another quality of money. Bitcoin can actually be divided into 1/100 millionth of a Bitcoin. That little unit there is called a Satoshi, as I mentioned earlier. And so if Bitcoin were ever to be worth $1 million, you could still have the equivalent of a US penny. So it's very divisible. And that's important too. A lot of people are like, oh my gosh, I can't afford a Bitcoin. It's $35,000. No, you can buy 1/10 of a Bitcoin. You can buy 100th of a Bitcoin. And people set up recurring buys to just buy a little bit of Bitcoin every month. So there's ways to do that. Divisibility, if you go to buy, your Starbucks coffee, you're going to have a hard time shaving off your gold bar to get just the right amount that you want. Storage, we talked about the advantages and disadvantages of Bitcoin storage. But really, if you can hold 12 words in your head, you can travel all around the world and you essentially have access to all of your wealth. It's kind of like having a Swiss bank account in your pocket. Warren Buffett jokes with gold that, you dig gold up out of the ground and then you pay people to put it back in the ground to store it. And then there's also the factor too, as Ron, had mentioned before, a lot of people just have claims on gold and they don't actually own the physical gold. And you're like, is that gold really there? Sometimes it's hard to know.
Yeah, I think the claims really don't have the problems you're talking about.
Yeah,
it's not 25 pounds for a claim.
Yeah,
but what I've been told, I guess I believe this, is that ETFs and things like that have claims on gold. There's probably several claims on a particular piece of gold. So what happens when everybody wants theirs? Which I think is what happened in the 70s when the French said to the U.S. Because the dollar said redeemable in gold. The French said, "Here's your paper. Give us our gold." So there's a downside to the claims.
Yeah, and the nice thing about Bitcoin is even if someone else is custodying your Bitcoin and you don't hold it yourself, like people say, oh, you have to hold the gold yourself. If someone else is custodying your Bitcoin and they are audited, all they're doing is looking at this blockchain ledger, which can't be fudged. You can't have a bad accountant. You can't have an Enron situation. They can look at the blockchain, see exactly which addresses are associated with how much Bitcoin. The company holding that Bitcoin can prove without a doubt by signing a transaction with their private key that they own that Bitcoin. So there's no fractional reserves in Bitcoin. So you don't have to worry about that type of thing. There are, however, futures markets and things that trade based on Bitcoin's price, which is a little different. But if you actually want to hold, actual Bitcoin, there's ways to do that, and you can have complete assurance that you own that Bitcoin, especially if you have your private keys.
I think we're now bridging the sort of, some people don't view it as money; they view it as an investment. And I don't think that's a bad view. That's because obviously Bitcoin has some risk. So
and I think there's also what are called layer 2 solutions. So Bitcoin is this protocol layer. It's a settlement layer. And it's very, very secure. Earlier, when I talked about how much electricity it takes to secure the Bitcoin network with all these, nuclear power plants, in order to attack the Bitcoin network or to make a fake transaction, it would require that much energy plus some, which is why people say it's so safe. And the more people who are mining and running the Bitcoin software, the harder the Bitcoin network gets to be to attack. There's something called a 51% attack, and essentially it means you'd have to have 51% of people to agree to take the network down, and that's not in the interest of anyone who values Bitcoin. Sure. So scarcity, we talked a little bit earlier, only 21 million Bitcoins. Gold is also very scarce. But it's interesting, as the price of gold comes up, more people go dig it up from the ground and bring more gold online. And then, the last one is adoption. Probably the most important thing for money is, if you've got the Ron Surz coin and no one accepts it, it's not very valuable.
I like it.
Yeah, I'd buy a few. The amount of wealth right now that's stored in gold is about $10 trillion by most estimates. And the amount of Bitcoin or wealth stored in Bitcoin alone, this number keeps changing. It's about 650 billion today. When I made this slide, it was about 500 billion. But it's about 1/20th the amount of gold. And so you kind of have to ask yourself, okay, Bitcoin's been growing in popularity, adoption's increasing. Right now it's storing about 1/20th the value of gold. Is there a chance that with all the advantages Bitcoin has over gold, that it could maybe store 1/10 the value of gold? Could it be 1/5? Could it maybe someday surpass gold? We're moving more towards the internet age and less from digging up things from the ground. So you can see how people can make that argument.
There's something related that just struck me, and maybe it's not on point, but I'm going to throw it out there anyway because I'll forget it if I don't now.
I would expect nothing less.
Yeah. So the U.S. enjoys the position of being the world's trade currency, but China is certainly nipping at our heels. I just read recently that China is really working on their digital yuan. Yuan. Why yuan? However you pronounce that.
Yuan.
Yeah. It sounds like you're yawning. I know. But I mean, here we are in this sort of environment where maybe something digital will become the world's trade currency. Which,
the Fed is looking at these digital currencies and seeing what can be done with them. And the idea of creating something like a Fed coin is definitely on their minds. The way that transactions are settled, you don't need to deal with all these different ACH transfers and different banks and different protocols. Governments would love to have a digital currency, especially China, where they, could potentially, if it's a centralized cryptocurrency, they would have ultimate control over it. They'd be able to track everyone's spending.
Of course,
there's a lot of downsides.
That's their motive. We know their motive. Yeah.
Yeah, and so there's upsides with cryptocurrency. Every transaction ever is on the Bitcoin network. And then there's downsides. Every transaction ever is on the Bitcoin network.
Sure.
It's funny. People often joke that, not joke, but they accuse Bitcoin of being used for illicit purposes because it is this pseudo-anonymous and hard to track people down. But the fact is, if you're a criminal, about the dumbest thing you could do is use Bitcoin, because every transaction you've ever done is immutable and verifiable on this public ledger. And the IRS and the government have used this to hunt down people. They recently took down a ring of criminals, 300 different people putting things on the internet they shouldn't have in 30 different countries. And they were all taken down because they used Bitcoin.
Wow.
And the IRS was able to track them down. 38 different countries were involved. It was a website in South Korea for illicit purposes. If you think Bitcoin's this safe, anonymous thing, for the most part it is. The government has to work pretty hard, but it's possible to track people down on the Bitcoin.
Okay, interesting.
Yeah.
Okay, well, I have an observation. If you really think about it, we right now, we don't really have to carry the dollar with us. We can do that through a credit card, through a debit card. So we pretty much put our trust in knowing that the bank is going to do our transaction for us. So we don't have to carry cash.
Right.
So I think, Ron, at one point you had talked about there is a major trust issue. So I think that where we are at right now, we're getting accustomed to trusting in a different type of currency or a different way of buying things. So this seems like it's just a natural. It's just my opinion anyway.
Yeah, it does.
Yeah. And, the nice thing is the Bitcoin network works without any banks. You don't have to trust banks. I don't know if people realize this, but during the first 3 months of the pandemic, banks charged people over $11 billion in transaction fees and low balance fees, all sorts of fees that banks, love to charge. When interest rates are this low, they kind of have to. And, if you're in one of these, we have a luxury living in America. If you're in Venezuela or Hong Kong, banks can also freeze your bank accounts and not permit you to access your funds. That can happen with the Bitcoin network. You can always access your funds.
Right.
And as far as illicit activities, people talk about Bitcoin being used to buy, drugs online and whatnot, but they have a long way to catch up with illicit activities to catch up with the big banks. HSBC was just fined $1.9 billion for laundering money for Mexican drug cartels. So, that stuff happens everywhere with dollars, with every currency. And so, it's you don't need to trust your bank and you don't need to rely on them. One of the sayings on the internet is, long Bitcoin, short the bankers. What's fascinating about this whole experiment is that you've proved you can run a whole economic system without any banks in the middle. And suffice to say, banks aren't pleased about that.
Right.
Yeah.
Okay. So what gives Bitcoin value, Maury?
Yeah, so there's a couple things. Utility, which we talked about earlier, it has these features that allow it to be moved around and stored, and it's kind of an improved digital gold. What else? Another big thing, scarcity is also something that gives it value. If you're just looking at anything with supply and demand, if there's more supply than demand, that causes something to go up. But the big thing is this adoption. And so what clues do we have that Bitcoin is becoming more adopted? Well, there's a company in getting ready to do their IPO here in the US called Coinbase. And what they are is a place where you can go online. It's just like a brokerage in a way, like an E-Trade or a Fidelity or a TD Ameritrade. You log on, set up an account, hook up your bank account, and Coinbase will allow you to convert your dollars into Bitcoin. They currently have over 35 million accounts. So, it's certainly gaining traction. Universities, the world I play in, like Yale, Harvard, Stanford, MIT, they all have allocations to crypto assets. Fidelity, one of these brokerages I talked about before, they're huge backers of cryptocurrency. In fact, their president, Abby Johnston, has had a Bitcoin mining rig in her office for, I want to say at least 5 years. They also are one of these companies that will custody your Bitcoin for you. So when the Yales and Harvards of the world want somewhere to safely store their crypto assets, Fidelity provides that services. The government actually recently passed a law that allows banks to custody digital assets. So you can kind of see that this is the way the world is going. And part of that digital asset is maybe someday they want them to have a Fed coin, but in the meantime, they can custody other digital assets. Mass Mutual is a old stodgy insurance company. They just bought $100 million worth of Bitcoin. There's future markets that exist. Chicago Board of Options Exchange, the Chicago Mercantile Exchange, all trade futures in Bitcoin just like you would in soybeans or pork bellies. PayPal this last year made an announcement that they are allowing all 26 million of their merchants to accept Bitcoin as payment. For a while there, as new Bitcoin was coming online, PayPal was actually buying 70% of all the Bitcoin that was mined for a while. A lot of famous investors like Bill Miller and Stanley Druckenmiller and Paul Tudor Jones have significant allocations to Bitcoin and are big proponents. Bill Miller, the guy who beat the S&P 500, he has a hedge fund that at one point was 50% in Bitcoin. Okung there, that's referring to Russell Okung. He's an NFL player who just demanded that half of his salary be paid in Bitcoin. So half of his $13 million salary, he's going to be getting in Bitcoin. So you can see there's, a lot of celebrities, Elon Musk tweeting about it. It's gaining traction. I don't see the world as going the other direction. When I look at my kids, they're growing up with digital assets. They don't necessarily want dollars. They want Pokecoins for their video game or V-Bucks to play Fortnite. Digital assets to them are real assets, even if they're not US dollars. And so, I think the world's changing in that regard. And one other thing we talked a little bit earlier about eBay and valuing networks. And that is, as these networks grow, the value of those networks isn't linear. And that's kind of what that chart was showing with Metcalfe's law. There's a guy named Bob Metcalfe who invented the Ethernet here in Austin, one of the co-creators of the Ethernet. And he came up with a law that basically said that the more people you add to a network, it grows exponentially. It grows n squared versus linear fashion. And that line there, that chart that I'm showing, actually on the bottom there, that's done by a gentleman named Tim Peterson, he's a great follow online on Twitter. I have a source underneath there. He's worth a follow. But he's shown some work showing that as the number of active Bitcoin addresses grows, the value of Bitcoin almost tracks it pretty darn closely. And this same kind of chart can be used to value things like Facebook as its network grew, as Netflix's network grew, anything that benefits from these network effects. This is one way to kind of value them. So when people are like, oh, how do you value this? It doesn't have any value. Well, it has more value the more people want to use it. And I think that's a safe assumption to make. And all of that, if you take all of that into consideration and then look down and see that we're still at less than 2% adoption in the US, how would you have liked to invest it in Facebook when it was less than 2% adoption, or Amazon when it was less than 2% adoption?
Yeah.
So people who don't think, oh my gosh, 40,000, that's a crazy valuation. There's only 21 million of these things. In the last 24 hours, I forgot how many, it was like 100 new accounts came on board with that held Bitcoin, more than 100 Bitcoin. So people want these things, and there's only so many of them out there. And now that institutions are finally coming on board and we have custody solutions like Fidelity and folks like that, it's safe for them to. I posted a tweet about 3 years ago that said at some point, right now, if you own Bitcoin, it's career risk. I think 5 years from now, if you don't own Bitcoin, it's career risk. So that's kind of where I'm coming at it from, and as a new asset class. Yeah.
Yeah. So now we've jumped over from a currency to an investment, which I'm totally on board with. I think. Yeah.
I mean, that's how it started. It started off as, hey, I can buy this coffee for Bitcoin. This is cool. And then it became, companies saying, gosh, I don't trust the dollars in my treasury. I'm going to turn them all into Bitcoin because I trust it as a store of value more. So briefly, here's the price chart. I don't want to talk too much about price because a lot of people focus on price and, oh my gosh, it's grown, 100,000% and all that. This is just the last 5 years. And as you can see, it's equally ridiculous. One thing to keep in mind, though, is if you look at 2017, that year was a crazy year. It was the year I first got involved with crypto asset hedge funds, and it was really kind of taking off. It was kind of the dot-com year of the crypto world. And Bitcoin jumped from 1,000 to almost 20,000 over the course of a year. And that was kind of unsustainable. People saw the prospects of what this could provide, but the fact of the matter is the world wasn't quite ready for that yet. And then over the next year, it crashed from 20,000, down to a little below 4,000. So it's a wild ride, to say the least. If you did buy at the peak in 2017 and held on, you'd be making money right now. But it's not for the faint heart.
Right.
Maury, I was just mentioning before the show that yesterday, because I haven't been following Bitcoin at all, and now I am, and all of a sudden in my feed I get Bitcoin crashes, and this might be a good time to address that, because we're going to see that all the time as an investor.
Yeah.
And it's kind of, it's status quo, right?
Yeah, as Mark Twain said, the claims of my death have been greatly exaggerated. I think that Bitcoin, every few months, the article comes out, oh, Bitcoin's dead, Bitcoin's crashed. It is very volatile. But if we look at, this year's low price compared to last year's low price compared to the lowest price it was the year before, it's this nice steady climb up. From when you could buy a pizza for 10,000 Bitcoin to now when each Bitcoin is worth $35,000. So it's as more demand comes on board and there's less supply being produced each year. It's simple supply and demand if people believe that is a store of value, and that's really what it's about. But the US dollar is all about belief. Gold is all about belief. These are stories we tell ourselves. And it depends on how much you believe it that something has value.
Okay, we have a question here from Jim. Thanks for being on the show, Jim. What's to stop a new Fed coin from competing with Bitcoin and forcing it to the side?
I don't know that it would necessarily force it to the side. As I said earlier, there's a lot of different currencies. I think Bitcoin is just one more. If there is a digital version of the dollar, I think it can exist alongside Bitcoin. The problem is the people who are buying Bitcoin are not necessarily the people who are going to be rushing out to buy digital dollars. It just has different characteristics. It's that trust factor. If you don't trust fiat paper currency, you're probably not going to trust them to not print a bunch of digital coins.
Yeah.
And so, and as far as shutting down Bitcoin, that's kind of hard. Many years ago, they tried to shut down gold, and that didn't work. I want to say it was in the 30s. To shut down Bitcoin, you'd essentially have to shut down the internet, and I don't see that happening. It's someone once said that a bet on Bitcoin is the bet that the internet lasts longer than your current government. It's a little cheeky, but I think the internet's around to stay. China, for example, banned cryptocurrency exchanges. And the cryptocurrency exchanges up and moved to other countries, and China is one of the biggest holders of Bitcoin to this day.
Wow, interesting.
So here's another question. I think this is going to go along with your slide. Are there any stable cryptocurrencies? And our next slide is actually
Yes.
about other cryptocurrencies.
Yeah.
Yes, and I actually don't have any stable coins listed here, but a stable coin is a way for you to participate in this digital ecosystem without the wild ride that is, the price fluctuations. So, for example, there's a few stable coins that I can somewhat endorse. There's one called USDC. There's one called GUSD, which is the Gemini US dollar coin. There's the Circle US dollar coin. There's the Trust US dollar coin. And what these folks have done is they've taken a bunch of dollars, put them in a bank account, and they're audited, and they say, okay, we've got $10 million in this bank account, and we're going to issue $10 million of this digital currency. And the reason that's done in a lot of ways, one is if people want to buy a coffee or something, it's a little easier to go to the store and know that the price of milk hasn't dropped in half since you got there. But the other thing is there's a lot of people participating in this ecosystem who don't necessarily want to deal with the U.S. government and the regulations around holding dollars and everything that entails. So people can set up a cryptocurrency exchange that only deals in digital dollars, and they can trade those digital dollars for Bitcoin. And it's a great way to experiment. I don't necessarily recommend that. I prefer the US-based institutions where they have banking licenses and things of that nature. But it's a way for people to, use these digital dollars and trade them for currencies and have a more stable store of value than just holding it in Bitcoin. But yeah, there's a lot of experimentation going on. In fact, If you bring up that slide, I'll talk about one or two of them. I think we've got a minute or two.
Okay. Yeah. Let me go back to this. Okay.
The biggest one to know about is one called Ethereum. It's that first one there. And if Bitcoin is a giant ledger in the cloud that just keeps track of how much Bitcoin people has, Ethereum is actually a supercomputer in the cloud that's run on hundreds of thousands of computers. And to power it, you need Ethereum. So you pay Ethereum to use this shared supercomputer. And what the supercomputer allows it to do is Ethereum, you can have programmable money, which is a really fascinating concept. You can create things that are called smart contracts. In the much way, gold is kind of the shiny rock that sits there, and Bitcoin is this digital asset that just stores value. Ethereum has all sorts of possibilities. For example, last night was the national championship football game. Ron and I could each put 10 Ethereum into a smart contract, and that smart contract could then go out the next day, hit the ESPN site, see who won the game, and give the rewards of that bet to either Ron or I. And this is all done trustlessly without any intermediate third parties, in much the same way that you've eliminated the banks. You can have these smart contracts, and if you think about it, Kyle Samani, who is a hedge fund manager I worked with at Multicoin Capital, one of the most insightful things he said to me was, all Wall Street is one giant smart contract. It's I'll give you this much money, you give me this stock. I buy this insurance product, and if this happens, you pay me out. I want to buy a futures contract that the price will be X on such a futures date. All Wall Street is smart contracts. And if you can replace the banks, you can also replace Wall Street. If you think about it, casinos take 10% of a wager to tell you who won the game last night. Now, obviously, it's not worth 10% of your money to tell you who won the game last night. You can ask anyone on the street. what they're providing is trust. But, we've shown over the last 12 years that we can transact value in a trustless way with Bitcoin. Why can't we set up an online casino where you cut out, all of these middlemen fees and rely on cryptography and math to come to the right answer? And, someone's going to do that. There's going to be a casino where they charge 1%, and the casinos are not going to be pleased about it. So smart contracts are a fascinating, revolutionary concept.
Yeah.
It's still rough right now. I mean, they're breaking things, they're figuring things out. But that is kind of where the future goes, where you can, have these, a Facebook, for example, you could have a whole platform. There's these decentralized apps. You could have Facebook without a company behind it. And it's a little bit more trustworthy. You'd be in charge of your own private information. You could determine which ads you see. And you don't need to have a third-party corporation telling you what's up.
Right.
I want to leave enough time for our listeners to know. Okay, so here we are. Good.
All right, the most important thing, right?
Yeah.
So first off,
I think this is the most important slide for anyone who. So
yeah, and I'm not recommending people go out and buy 20% of their portfolio in Bitcoin, but I do suggest people get off zero. Go out and buy $100 worth of Bitcoin. It's exciting. It's interesting. You can learn about it. And so how do you do that? There's ways in the public markets. So if you have a stock account somewhere at an E-Trade, a Fidelity, a TD Ameritrade, a Schwab, some of the things you can buy, there's something called the Grayscale Bitcoin Trust, GBTC. And that is a fund that all they do is they buy Bitcoin. It is, for guys like Ron and I, it will horrify people out there because we're like these passive index guys, low fees. GBTC charges a 2% annual fee, and they also usually trade at a premium. So if Bitcoin is trading at 30,000, GBTC might be, selling for 36. The premium's typically 15 to 20%. This week alone, it's been as high as 30% and as low as 15%. It's kind of one of those supply-demand things, and it's frustrating. Ideally, you'd want to invest in an ETF, but the Securities Exchange Commission hasn't approved one yet. They're not eager to do that. They're still kind of in learning mode. It'll happen, maybe this year, maybe next year, at which point those premiums will go to zero. But so GBTC is one way to invest. People don't freak out about a 2% management fee when last year it was up 304%. Bitwise 10, they're trying to be the S&P 500. They also have a publicly traded option called BITW. They own some Bitcoin, some Ethereum, and the other 8 top coins at the moment. It's certainly that one just launched. The premiums are ridiculous, whereas Grayscale trades at a 30% premium. Bitwise might be trading at a 300% premium. It'll settle out someday, so one to keep an eye out. They post on their website what the premium is, so maybe someday. A proxy on Bitcoin is MicroStrategy. The CEO, Michael Saylor of this company, had $425 million sitting in cash, and he just saw it losing value every day. And he said, you know what? I'm in charge. I'm going to put it all in Bitcoin. And so a publicly held company said, we trust our treasury dollars more in Bitcoin than US dollars. He did that when Bitcoin was about 10,000. So, that 425, more than tripled since then. Last year alone, they bought over $1 billion with Bitcoin. They did some raises of money with which they just went out and bought Bitcoin. So at this point, MicroStrategy, although it's a real technology company that earns millions of dollars every year doing, technology advising, the fact is it's basically a proxy for the price of Bitcoin.
So it's a mutual fund?
Yeah, it is a company, just a publicly held company. It's not a company.
Okay.
Yeah, it's just an individual company that's in some other indexes. Okay. Square is another company. They make a lot of the cash registers that you use when you go to pay for a pizza. They just recently spent $50 million of their treasury to buy Bitcoin. They also make an app similar to like a PayPal app. It's called the Cash App, which you can send money to your friends and you can buy Bitcoin with that app or send Bitcoin to your friends. Overstock is a proxy play also on the crypto asset world. They're really focused on, when I said crypto can replace Wall Street, Overstock is creating digital security exchanges. So you would trade stocks in much the same way dollars are represented by Bitcoin. You can also represent stocks as these digital tokens. So they created a whole exchange to do that. That's a new and exciting world. And it's going to be much more efficient than Wall Street is now, where it takes 2 days for a stock to trade, to settle. All the headaches that come with moving your money around in Wall Street, this should hopefully solve a lot of them. PayPal just made it so you can buy Bitcoin via their app. Riot is an interesting play in the public markets. They own about 8,000 mining rigs in Oklahoma, these Bitcoin mining rigs. So people who like to, invest in gold miners or the picks and shovels type thing, Riot is an example of that, as is Hive Blockchain. They own a bunch of miners. They own a cryptocurrency exchange in Canada. Both of those are up ridiculous amounts this last year, as you can imagine. But it is a different way to play the Bitcoin space in public markets. And the nice thing about public markets is you can buy these types of things in your 401k or your IRA. So, don't pay taxes on those hopeful gains. And then Bitcoin exchanges. This is where you actually turn your dollars into actual Bitcoin, and the exchanges will hold the Bitcoin for you, or you can have them transfer it to your own private wallet. For most of your audience, I would say the problem with being your own bank is you have to be your own bank security. So you might want to trust these guys who have teams of people to make sure that no one ever gets to their private keys. A real brief point, when people talk about, the Bitcoin network getting hacked, the Bitcoin network has never been hacked. No one has ever printed a Bitcoin that didn't exist. No one has ever double spent a Bitcoin. When people talk about the Bitcoin getting hacked, what they're talking about is someone lost their password. And in the past, very, very early on, there were exchanges that weren't as secure as they needed to be. The technology wasn't there in a lot of ways to keep those passwords safe, and they got hacked and people lost Bitcoin. But anytime you hear about Bitcoin getting hacked, what you should hear is someone lost their password. That said, I would trust these guys, these four listed above, to hold your passwords over yourself. One of them is Coinbase. They're going to have an IPO later this year. They're one of the best known ones in the US. They have what's called a bit license in New York, so they're licensed to trade cryptocurrencies. Gemini is owned by the Winklevoss twins. May know them from their days at Facebook. They own about 1% of all Bitcoin outstanding. They're huge fans and promoters of Bitcoin. They just wrote a great article on why they think Bitcoin could get to be 500K. And the basic premise is that they see it replacing gold, and to replace gold, Bitcoin would store about the same amount of value as gold currently does when Bitcoin gets to be 500K. Kraken is a cryptocurrency exchange. They have a real emphasis on security. They're also a licensed bank in Wyoming. All of these people, if you put dollars there that's FDIC insured, you can place a limit order for Bitcoin. Say, I only want to buy, a tenth of a Bitcoin, and only if it gets down to 30K. It's just like trading stocks. And Binance.USA or Binance.us is the cheapest trading option. Their fees are a lot lower. They have a lot more tokens. There's a million of these crazy tokens. I would be wary of getting anything. I'm wary of things in the top 10, let alone beyond the top 10. So, buyer beware, but it is fun to see what some of the problems that these cryptocurrencies are trying to solve, and that's a great place to learn about them. And then there's phone apps. You can download these apps like the Cash App from Square, PayPal. Abra is one of my favorite companies in the space. The Robinhood app, you hear about all the millennials. In addition to buying stock, they can just press a button on their phone and buy Bitcoin. And then lastly, there's ATMs. There's over 11,000 ATMs in the world. I think about 8,000 of them are in the US. You can buy Bitcoin at Coinstar machines. I would not recommend ATMs. They charge outrageous fees like 15%, 17%. The recommended way would be to go set up an account at one of these Bitcoin exchanges. You'll have to, give them your social security number, probably send a picture of your ID, all the things you need to do to set up a brokerage account. But because they're legitimate and they're regulated, they're a lot more trustworthy, and the fees are going to be a lot less.
Great. Just to keep track, is there any one of these that has a basket of cryptocurrencies, or are they all Bitcoin?
Yeah, no, the Bitwise 10 is basically, it holds the top 10 cryptocurrencies in proportion. And that's the one that I warned a little bit that the premiums are a little crazy right now.
Gotcha.
I think it will eventually settle down. But yeah, that's the equivalent of the S&P 500 at this point.
Gotcha. Okay. Great.
Yeah, and also Bitcoin, of all the cryptocurrencies out there, Bitcoin accounts for about 70% of all the value. Ethereum, the second biggest one, accounts for maybe 12-15%. So between those two, you're pretty much accounting for the majority of value in this space.
Gotcha.
And then real briefly, some other considerations too, just if people invest in this. Taxes, it's taxed exactly like stocks. So if you buy Bitcoin, you hold it longer than a year and you sell it, you pay long-term capital gains on it. If traded for another crypto asset, like if you trade Bitcoin for Ethereum, that's a taxable event. One thing, because it is considered property by the IRS, just like a stock, one of the reasons it hasn't really taken off as a medium of exchange is if you bought Bitcoin 5 years ago and you wanted to buy a cup of coffee at Starbucks with that Bitcoin, you'd potentially have to pay capital gains on the difference between when you bought it and when you used it to buy that cup of coffee.
Yeah.
So it's not real practical. There's some tax things that need to get sorted out by the IRS. They're trying to figure out ways that they can make that work. But for the most part, that's why now people are holding on to Bitcoin. Or I should say hodling onto Bitcoin. If you're in the cryptocurrency space and you hear people talking about hodling, HODL, there was a Reddit thread a long time ago where a guy was complaining that Bitcoin, it's so up and down and he always sold at the wrong time. And it was a late night post and he mistyped. He goes, I'm just going to hodl forever. And it kind of caught on in the community and it's a meme. Some people interpreted hodl to mean hold on for dear life. Which is an appropriate opinion, I suppose. Yeah. So if you hear people talking about hodling, they're not, typing, incorrectly on their keyboard. That's a term in this little cults of cryptocurrency. The other thing, estate planning. If you do hold your own coins, and man, you've hidden those 24 words well. If there's someone you want to leave them to, make sure that they know where they are. It's another reason I recommend using one of these exchanges and letting them custody it. People will say, not your keys, not your coins. Yes, that's true. But I think at some point, you have to, weigh ease of use versus, we're not in Venezuela, so. And then security, so important for your audience and probably a show entirely of itself. But your email, your brokerages, any of these crypto exchanges you're on, you should have two-factor authentication where they, you use an app on your phone to generate a code to get in so that it's something plus something you have, makes it a lot harder for a hacker to get into your accounts. Because if they can log into your crypto asset account, they can ship the crypto assets out and it's hard to track those down. Whitelisting is another thing. You can make it so that if you're on one of these crypto asset exchanges, you can say Bitcoin can only be sent to this address. And if someone tries to add an address that it can be sent to, it takes 7 days before that clears. So that gives you a little time to talk to a Gemini or Coinbase and say, whoa, I am not trying to send this Bitcoin to this address. And they can step in and prevent that from happening. And then lastly, I talked a little bit about hardware wallets. Here's another one. This is a way for you to hold Bitcoin yourself. Just don't lose it, or, it's okay if you lose it, just don't lose the 24 words that you use to restore your wallet if you need to. And the nice thing about a hardware wallet is they will randomly generate Bitcoin addresses and private keys for you. So.
Really interesting. That was great. Thanks, Maury.
Yeah, I think I've got one last slide.
Yep.
Yeah, it wouldn't be a boomer investing show without a cartoon. So there's Bitcoin looking at the Museum of Antiquated Currencies. I don't think Bitcoin's going to replace currencies. I mean, it's a libertarian dream, and there's a lot of people out there who talk about the dollar, not being the reserve currency, and that may happen at some point. But I think it's just another currency. There's 180 of them. And this is one more. And as you can see, it has unique properties from all of those other 180 currencies. So I think it offers something. I think it brings something to the table, more than probably 150 of those currencies do. There was also a little poll there from Ron Paul, who did, I think it was like 3 years ago. It said, if you had $10,000 in 10 years and you had to invest in only one thing, what would it be? And about 60% of his audience said, Bitcoin, without a doubt. And this is 3 years ago. So if you think about, millennials, what they're interested in, they don't see gold as this huge store of value. I realize boomers do. And, for them, Bitcoin is this hard asset. They've, seen when we went off the gold standard in 1971. But you also have to figure out that this is going to be the largest generational wealth transfer in history. And those boomers are going to have to get rid of that gold at some point. And who's going to buy it? Are the millennials going to buy it? The people who are saying, I'd much rather hold Bitcoin than gold? It's just something to think about. And as evidence, data to back that up, in the last, since October, over $3 billion has gone into GBTC, this grayscale Bitcoin trust, and over $7 billion has come out of gold ETFs. Oh. Mm-hmm. So this isn't something that's happening, years in the future. Now, mind you, it's a little bit of hyperbole right now. Bitcoin's taking off. It's in the news, and that isn't always the case. But you can see where that trend could happen. Yeah.
Sure.
Yeah.
Okay. Well, Maury, that was an wait, I think we have one more comment here. Let's see. Oh, he says, Jim says, thank you, Maury, Ron, and Kathy, for this very useful presentation. Well, thank you so much for watching,
thanks,
Jim.
Thanks for tuning in.
Okay. Maury, we want to thank you so very much for being on the show. And Ron, did you want to say anything to Maury before we say goodbye to him?
Yeah, that was great. I learned a lot. Just share a personal note. So I said to my wife, "We're going to buy some of this." She goes, "What?"
Yeah. Well, don't go crazy. Yeah.
That's not going to happen. So it's not going to happen without her agreeing. So she's out golfing now, but she's going to watch the show, and it'll be a good metric for you. I'll let you know if we buy and how much, and because I think it's one of those things where, unless you own some, you're not going to watch it. You're just going to think of it as this thing I'll never understand.
That's right.
And even if you don't invest it, perhaps you'll think of people like me as being less crazy, which is really kind of part of the goal.
The question I do have for you, Maury, is are people buying like large items, cars, houses with Bitcoin? And is there ever going to be a possibility that you could purchase with the crypto?
You need both the buyer and the seller to accept it. People, last year, one of my real estate agents said he had a guy who bought a house with Bitcoin, one of my buddies, but he didn't exactly give Bitcoin to the seller. He just sold his Bitcoin, converted it to dollars.
Yeah, right. Right.
So that's pretty much what's happening these days. And there's some fascinating things. There's this thing called the Lightning Network, which is built on top of the Bitcoin network, which will allow more day-to-day transactions to happen without being taxable events at super fast speeds with zero fees. You can send 2 cents to Germany and it'll be there instantaneously. And that's using the Bitcoin payment network and not even caring what the price of Bitcoin is. They just hop on the network, are able to transact, make it permanent and immutable, and that everyone can see forever. And so there's some interesting projects being built on the Bitcoin network that are going to be really exciting to see over the next few years.
Oh, sounds absolutely fascinating. Totally love it.
Beware going down the rabbit hole. I spent 6 months listening to podcasts and reading books and going to conferences. I cracked the surface. So I could talk about this all day, but hopefully this is a good primer.
All right. Thank you so much for being on the show, Maury.
Yeah, thank you.
Okay, Ron. So now you wanted to go over next week or next show.
Yeah. So our next show, I've been, probably everybody on this call sees this, but you could spend your whole day just reading and listening to people's outlook for 2021. And I'm going to jump in that mix, but I'm going to share with you what I'm hearing almost everybody else say, and I'm going to disagree. And I'm going to, I think, leave an important message, especially for baby boomers. So I think our next show is going to be really important. That 2021, I think, is going to be a challenge. I hope it's not. But all the ingredients are certainly there for a really tasking year. And just to remind viewers that we're here to help, and there's a lot of ways you can get help from us. You can go to these various websites here. But most importantly, if you could support us, that would really be nice. So like us on Facebook and on YouTube. And if you'd like to help sponsor the show, there's a website called Patreon, Patreon, where you can support us. And for that, we'll give you some extra stuff, a little more education. And as always, our presentations are in SlideShare. So if you want to look up, say, the ways you can invest in Bitcoin, you can find the SlideShare show on for Maury and get that slide, or you can ask us and we'll send you that slide with all the ways to possibly invest. So again, thank you for listening, and I hope 2021 is a great year for everybody.
Okay, thanks everyone. We'll see you in a couple of weeks.
Couple of weeks. Thank you.
Bye.